So, good morning everyone. Today I'll be talking about the straight line method of depreciation. This is a common accounting method used to spread the cost of an asset evenly over its useful life. I'll explain how it works, show the formula, give a real life example, and discuss its advantage and limitations. So, first, what is straight line method? Certain method is a depreciation is the method of spreading the cost of an asset evenly over its useful life. It assumes that asset loses the same amount of value every year, making it the simplest and most widely used depreciation method. So let's move on into a key idea. Depreciation represents how much of an asset's value is used each year. The straight line method keeps this equal yearly, making financial reporting consistent and predictable. So here, the formula for straight line depreciation is depreciation expense per year equals the cost of asset minus residual value divided by the useful life. Here, the cost is what the asset was purchased for. The residual value is how much it is expected to be worth at the end of its life, and the useful life is the number of years it will be the used. This formula makes it easy to calculate the same depreciation expense each year. So let's dive into the example problem. So let's see company buys a laptop for 40,000. It expects to use it for 4 years and estimates it can sell it later for 4,000, which is the residual value. So using the straight line formula, the depreciation expense per year would be 40,000 minus 4,000 divided by 4, which equals to 9,000 pesos. This means each year the company will record a 9,000 as expense. By the end of the fourth year, the laptop's book value will match its residual value of 4,000. So let's talk about the advantages of this method. One of the advantages of this method is simplicity. It's easy to calculate and apply. It also provides a consistent annual expense, which helps in budgeting and financial planning. Additionally, it's widely accepted in accounting, making reporting more straightforward. However, straight line depreciation doesn't always match the actual usage or wear and tear of an asset. For example, a laptop might lose value faster in first year due to technology updates. So, while straight line method is simple, it may not reflect reality for assets that depreciate unevenly. So, lastly, this is my reflection about this method. So, it's simple and easy to apply, making it very practical for everyday business accounting. I appreciate how it provides consistent expense allocation each year, which helps in planning and budgeting. However, I realize it may not always reflect the actual wear and tear of assets, so understanding its limitations is important. So lastly, in conclusion, the straight line method is a simple and effective way to allocate the cost of assets evenly over their useful life. While it may not reflect actual wear and tear of all assets, it's practical, consistent, and widely used in business accounting. So thank you for listening.